Hello traders, and welcome back to Explain the Charts. Today we're going to be taking a look at the XAUUSD, or gold, and analyzing both the news and the charts to understand the current market conditions. Let's start with the news. Over the past few days, the US dollar has been on a strong recovery, hitting a 13-month high against a basket of other currencies. This comes amid increasing concerns about inflation and the potential for the Federal Reserve to raise interest rates sooner than previously expected. A stronger US dollar typically puts downward pressure on gold, as it makes the precious metal more expensive for holders of other currencies. Furthermore, recent economic data, such as the July Personal Consumption Expenditures (PCE) price index, has shown that inflation is still sticky and not yet under control. This has raised concerns among investors about the Fed's ability to successfully navigate the economic landscape and avoid a recession, which has led to a shift in market sentiment. With the market now favoring a more hawkish outlook, gold's appeal as a safe haven asset has diminished. Now, let's take a closer look at the charts. If we look at the daily chart, we see that XAUUSD has been on a decline since the start of the week, breaking below the key support level of $2,500. This break below $2,500 is significant because it was a strong psychological resistance level, and now it is acting as a support level, which means there could be potential for further downside pressure. However, it's important to note that the long-term bullish trend for gold remains intact, as we have seen a significant price increase over the past year. But for now, it seems that the recent news and the technical break below $2,500 have put the bulls on the back foot. Moving to the 1-hour chart, we can see a clear downtrend. The price has been consistently making lower highs and lower lows, indicating that sellers are in control. We can also see that the recent decline has been relatively steep, with the price falling quickly from the $2,500 level. The 1-hour chart also shows that the recent break below $2,500 was accompanied by increased trading volume, which confirms the significance of this break. On the 15-minute chart, we can zoom in on the recent decline and see a series of bearish candles, with large red candles showing selling pressure. This suggests that the selling pressure is not only coming from short-term traders, but also from institutional investors. So, what can we conclude from the chart data? It appears that the market is currently favoring the bears, with the price of gold declining below key support levels and showing signs of weakness. However, it's important to remember that the long-term bullish trend for gold is still in play. The recent decline could be a correction or a pullback within the larger uptrend. We should be particularly watching the $2,450 level, which is the next key support level. If gold breaks below this level, it could indicate a further decline in price. On the other hand, if gold manages to bounce back above $2,500, it could signal a change in market sentiment and a potential return to the bullish trend. For short-term traders, the current market conditions are favoring a bearish approach, with the potential for further downside movement. However, traders should exercise caution and be prepared for potential reversals, as the market can change quickly. For long-term traders, the long-term bullish trend for gold remains intact, but the recent decline could be a sign of consolidation or a pause before a potential continuation of the uptrend. Traders should be looking for potential buy signals, such as a break above the $2,500 level, which could indicate a change in market sentiment and a potential return to the bullish trend. It is essential to remember that this is just an analysis of the current market conditions based on the news and chart data. The market is constantly changing, and the future direction of XAUUSD is uncertain. Traders should always use their own judgment and risk management strategies when making trading decisions. In summary, XAUUSD is currently facing significant headwinds due to the strong US dollar and concerns about inflation. The recent break below $2,500 suggests that the market is favoring the bears, but the long-term bullish trend for gold remains in play. Key price levels to watch include $2,450 support and $2,500 resistance. Traders should be looking for potential buy signals, such as a break above $2,500, and potential sell signals, such as a break below $2,450. Remember to exercise caution and use your own judgment when making trading decisions. Thank you for watching and happy trading!